Traders. We've got Scott Bauer, the CEO of Prosper Trading Academy, joining us this morning. We've been talking crude. Scott, first and foremost, welcome. And I wanted to get your thoughts on that in a minute. But first, I wanted to talk the U.S. dollar. Last week, it came off, I think it was a 4 or 5% pullback off that 104 level, back down to right around 99, I think it was. What should we be keeping an eye on in terms of that this week?
I mean, really sharp moves, Ben, both on the way up and the way down, almost like we haven't really seen before. Big time. And you know what? With the announcement yesterday about continued, stay-at-home protocol through at least April 30th here, the dollar's probably going to gain some strength. My guess is we probably will try and get back to that 104 level sooner rather than later here. It came the halt, I should say, the sell-off last week came really with a broader risk-averse sentiment, and that lifted the yen. But I think that now with the announcement yesterday and most countries in the world, what we're seeing, really doing the same sort of thing with quarantining now, I think we're going to see another push up in the dollar.
Yeah, I mean, Scott, that wouldn't be out of the ordinary considering some of the pattern, the trend that we've been seeing over the last couple of years. I've been saying it reminds me of that whack-a-mole game from Showbiz
right.
Pizza, or one of the game houses. We would constantly see the dollar rally, pull back sharply, but ultimately it continues on that upper trajectory. I'm looking at some of the other foreign currencies that have been really taking a hit, and while they came off the lows recently, probably weighing on the dollar some as it came off that 90 or that 104 level. I mean, when you talk about the Canadian dollar, which ultimately gets impacted by crude oil, the Mexican peso, and some of the impact that those currencies are feeling. I mean, it's across the board though, Scott. The Aussie, the New Zealand dollar. I mean, it's not just our neighbors to the north and the south.
No, it is across the board. The euro too, and the sterling, you name it. So, just like you said, it's a whack-a-mole, pick your poison, and you really are seeing it across the board. Though, mentioning the Canadian dollar here, the double whammy with what's going on with crude has really got that under pressure.
Yeah, Scott, let's talk about the UK, because I saw Fitch cut their credit from AA to double AA minus while affirming the US's rating last week. How big of a deal is this? It doesn't seem like it's going to be the biggest considering some of the impact that the coronavirus is having on global economies. I mean, is this a major concern?
I mean, right now it's a footnote in the long list of concerns that are out there. It really isn't. If we start to see a further downgrade, then maybe there's some consideration to it.
Scott, I wanted to talk a little bit about rates and some of the volatility we've been seeing there. We're looking at some of the movement we've been watching recently in terms of the dollar. As Scott mentioned, the British pound's been a contributing factor to some of that volatile price activity we've been seeing in the dollar. But rates also, Scott, have been on the move. And I guess I'm just wondering, at some point, we've been talking about how the U.S. dollar is going to start to be a reflection of what we're seeing in rates. When does that start to happen? Is it a matter of dust settling? Is it a matter of, central bank activity kind of losing some of its stimulus initiatives? I mean, at what point are you going to be focused more on rates as far as them being that catalyst for the dollar relative to some of the other contributing factors that we were just talking about, whether it be geopolitical events or some of the other individual currencies really being the individual catalysts?
So we've been so saturated with central bank activity over the last weeks, almost on a daily basis here, that, that at some point is going to ebb a little bit. It is going to abate back a little bit, which probably will have a direct impact with rates. But, right now we're seeing the 10-year down. I think it's about 0.65 right now, or just under 0.65, really almost back to its low point here. And, I don't know how quickly this thing can get a move back on up, let alone to the 1% level, like we saw, just a few weeks ago when we saw a big rally. But, I don't know where we see that. But at some point here, and I think sooner rather than later, we will start seeing that central bank activity at least come to not a halt, but at least start slowing down, which will have a direct impact both on the dollar and rates.
Yeah, it's definitely given normalizing a different meaning at this point. Yeah. Let's talk a little bit about commodities, because I mentioned at the top of the interview I was going to ask you about crude and how concerned you are to see it back down below the $20 level recently. And I was talking about last week, and I think you and I even mentioned or discussed how, hey, with the indices rallying to the upside but crude not really participating, it's telling us that there's still concerns out there in terms of economic conditions.
Big time. And there's still a pretty steep curve in crude going out 6 months, 9 months to where the futures are. So so it is pretty steep, but obviously in the near term here, Ben, it is, it's really in no man's land, because as we've just discussed ad nauseum, it's not just a supply issue, it's a demand issue. It's really, kind of that perfect storm for crude right now. I know JB was just talking about watching maybe the high teen level for West Texas, and it certainly is not out of the question. It's probably better than a 50-50 chance that we get there. Being at 18-year lows that we've seen right now, the demand is just brutal.
Go ahead. Yeah, no, I'm glad you brought that to our viewers' attention, because the 6-month, that spread is the widest we've seen since February of 2009 at 1285, and the contango spread that we're seeing right now, May, that one, the May-November Brent spread is at 1345. So, Scott, lastly, in terms of commodities, copper, I'd imagine kind of a similar situation, right? Signaling that there's still concern out there, still some uncertainty.
No doubt, but I will say it's very interesting with copper, Ben, is that it has stayed above that 10-year low that we've seen, right around 195-ish or so. That has held as just some incredibly major support. So for me, that's at least something to hang my hat on, or for copper traders, copper investors. Okay. That's something to look at there. If it does break that 10-year, kind of support level around 195, look out below. But so far, it is hanging in there.
Yeah, you raised your eyebrows as you said that potential for a breach of that level and what that would mean for you. I'd imagine that would raise many traders' eyebrows. Scott, really appreciate you joining us here. A great breakdown in terms of a look at what you've got your eye on, and we should be dialed in as far as crude to the downside, the dollar, some of the financials across the board. Trader Scott Bauer, he's the CEO of Prosper Trading Academy, and he's giving us part of his Monday morning here today to help us answer some of the questions. Now,